if you are an income earner or a self-employed individual, then this information is for you. With regards to the new tax act that will take effect from January 2026, I'm going to explain how these new tax acts are going to benefit you and how you can take advantage of this new tax act. So let's get in. So first off is, if you earn the minimum wage, whether the minimum wage of the federal government or the minimum wage of your state, you are exempted from paying personal income tax under the Nigerian Tax Act, right? You are exempted from paying personal income tax. Now, if you earn an annual gross income of 1.2 million naira, translating to 800,000 taxable income, you are exempted from paying personal income tax. Now, this is how this new tax law will benefit you. Now, the 800,000 naira is annually, right? So you're exempted from paying personal income tax in 800,000 naira annual taxable income. The third is, you will see a reduction in your payee tax for those earning up to 20 million annual gross turnover. The fourth is, gifts are exempted from being taxed under personal income tax. So let's delve into the allowable deduction and relief under the new Tax Act of 2025, which will take effect 2026. So one very important allowable deduction is pension contribution to the PFA, that is Pension Fund Administrator. Pension contribution to the PFA is an allowable deduction. Allowable deduction means that you can deduct them from your annual gross income so that you can get your taxable income, right? So the second allowable deduction is National Health Insurance Scheme. The third is the National Housing Fund Contribution. It's an allowable deduction under the new Tax Act. The fourth is interest on loan on owners occupied residential housing. Is an allowable deduction. It does not just end there. They have a very salient provision, which is the rent relief of 20% of annual rent. So you calculate the rent you pay annually, and 20% of it, you can deduct it from your annual gross income to get your taxable income, right? So 20% of the annual rent, capped at 500,000 naira, is an allowable deduction under the new Tax Act of 2025, which will take effect 2026. So it's important that you apply this deduction so as to reduce your tax liability or your tax obligation. It's called tax planning, right? So let's move to pension and gratuities. Now, pension and gratuities are exempt under the new Tax Act of 2025, which will take effect 2026. Now, pension fund and assets under the Pension Reform Act are tax exempt. Pension gratuity and any other benefit under the Pension Reforms Act are tax exempt. And the last but not the least is compensation for loss of employment spanning up to 50 million naira is tax exempt. That means you're not expected to pay tax for this pension and gratuities. Now, this is how the Tax Reform Act applies to personal income to individuals who are employed under an employer and individuals who are self-employed. These are the allowable deduction and reliefs under the new Tax Act of 2025, which will take effect from 2026. As we have learned today, pension and gratuities are exempt from being taxed under personal income tax. So I hope you learned something new. Don't forget to like, drop your comments, share this post, and keep subscribing to my channel so as to continue getting more updates from me. Thank you, and see you another time.